Good afternoon, dear students. I am Vipulkumar N M. I'll be teaching this subject, International Financial Management, for this semester. International Financial Management is a subject, it's a specialization subject, and which includes 5 modules. And this is the first module or the first unit, that is International Finance, an overview. And here we have the content of this unit, that is introduction, definition, features, scope, importance of international finance, issues involved in international business and finance, methods of payment in international business, international monetary system, meaning and evolution. Okay, let's begin with a question, that is, what is finance? So this is a specialization paper, especially finance specialization paper. So you already know what is finance. It is nothing but the provision of money at the time when it is required. We know that there are different type of organization, big organization, small organization, medium organization, and different types of organization like joint stock companies, partnership, sole proprietorship, limited liability partnership, etc. So whatever the case may be, all the organization require finance for its day-to-day requirement as well as long-term requirement. So here arises the importance of this particular topic called finance. So we will be learning the international usage of finance, how it can be managed and how it can be regulated. That all things we will be learning in this subject, that is international financial management. So before that, we need to understand what is international finance elaborately. So international finance, sometimes known as international macroeconomics, is a study of monetary interaction between two or more countries, focusing on areas such as foreign direct investment and currency rates. So here, sometimes international finance is also known as international macroeconomics. So macroeconomics is a branch of economics. In the economics, there are two branches, microeconomics and macroeconomics. So macroeconomics means if you are learning the problem of a mass or the problem of a people in the public space, that is known as macroeconomics, and it is not for a specific person or a specific individual, it is for all. So that is what macroeconomics, that is why international finance is considered as international macroeconomics. And in the international finance, we will be focusing on two aspects, that is foreign direct investment and currency exchange rate. So foreign direct investment means if those countries or those individuals who are from some other country, they are ready to invest their amount of money into another country for making profit or making revenue, that is known as foreign direct investment. So that is also come under this subject called international finance. And currency exchange, obviously, when we are doing transaction between two countries, there arises the currency exchange. So currency exchange is a prerequisite for international finance. We know that different countries are using different currencies. India is using Indian rupee, and United States of America, they are using US dollar. Russia is using ruble, and Kuwait is using Kuwait dinar. So these are the different currencies used by different countries. When it comes to international trade, there is always a need for currency exchange. So these are the things which is very important for doing an international transaction, and that is why it is come under international finance. So next is the meaning of international finance. It is related to the economics, commercial, and accounting activities of a multinational companies, international or global companies, government, and individuals. As I have already told you, it is a transaction between two countries, especially people from different countries. It can be a transaction between a multinational company and an individual resides in different countries, or it is a transaction between a government organization of one country and a multinational company of another country. So here you can see the international finance, the presence of multinational companies, the presence of international companies, the presence of global companies, government, individuals, everything we can see. And next is international finance is a discipline of exploring avenues of inputs and outputs from overseas in the area of goods and services and information with objective of profit maximization. So the ultimate aim of every business organization is to make profit, and profit is very much required for their growth. So when they have already explored their area, they want to move from their area to some other area or some other country. That is also create opportunity for another country. Like if, say, for example, if the companies like PepsiCo or Coca-Cola, they have already explored their country, that is US. So they are trying to start their business in some other country in order to make profit. So that also create opportunity for another country, and this also come under the sphere of international finance. Then definition of international finance. International finance covers all procedures, techniques, and tools that financial institutions such as banks and insurance companies provide to clients. These tools may include finance agreement, transaction strategies on securities exchange, etc. And international finance plays a significant role in modern economics. So international finance, we know that there are several techniques they are using for transactions. Like there are many banks which involves in the transaction between two countries. There are insurance companies. Many other intermediaries are there in the international trade. Like they want to exchange currency, they want to convert currency, they need to export goods from one part of the country to another part of the country. Many transactions are there. Here, the financial institutions involvement is very pivotal, and this also come under the financial, the international finance. So many tools they may be using in order to do all the transaction in a meaningful way. Next is features of international finance. First of all, it affects the economic and monetary system that transcend national borders. So in the international finance or international trade, the involvement of two countries is relevant. So the economic system or the monetary system followed by one country may not be the same with another country. So here arises a conflict. At the same time, there are some similarities, but there are some conflicts also. But in order to make an international trade, or in order to make an international transaction, we need to compromise. We need to have our own system. We need to have a system which enables us to do our transaction. It always involves a cross-border transaction. So the economic system and monetary system should be created in such a way which facilitate international trade, and this is one of the feature of international finance. And second thing is multinational companies, transnational companies, global companies, and foreign companies are the main players. So if you look into any international transaction, we can see the presence of multinational companies or transnational companies or global companies or foreign companies. So they are also plays a vital role in the international transaction or international trade. Next is features of international finance. First of all, it affects the economic and monetary system that transcend national borders. So in the international finance or international trade, the involvement of two countries is relevant. So the economic system or the monetary system followed by one country may not be the same with another country. So here arises a conflict. At the same time, there are some similarities, but there are some conflicts also. But in order to make an international trade, or in order to make an international transaction, we need to compromise. We need to have our own system. We need to have a system which enables us to do our transaction. It always involves a cross-border transaction. So the economic system and monetary system should be created in such a way which facilitate international trade, and this is one of the feature of international finance. And second thing is multinational companies, transnational companies, global companies, and foreign companies are the main players. So if you look into any international transaction, we can see the presence of multinational companies or transnational companies or global companies or foreign companies. So they are also plays a vital role in the international transaction or international trade.